Welcome, everyone. Today, we are looking at Topic 6 in your SS3 accounting series, Cash Flow Statements. This is a very important and practical topic. A cash flow statement shows the movement of cash in and out of a business. It is different from the profit and loss account. The profit and loss account shows profitability. The cash flow statement shows liquidity. This topic is common in essay questions. You must understand the components of the cash flow statement and how to prepare it. Pay close attention. Let us begin. First, let me explain what a cash flow statement is. A cash flow statement is a financial statement that shows the movement of cash in and out of a business. It shows the sources and uses of cash. It is prepared for a specific period. The cash flow statement is divided into 3 sections. The first section is operating activities. This shows cash flows from the normal operations of the business. The second section is investing activities. This shows cash flows from the purchase and sale of assets. The third section is financing activities. This shows cash flows from borrowing and repaying loans. The cash flow statement is important for assessing the liquidity of a business. Understanding the cash flow statement is essential for advanced accounting. This is a key concept. Now let me explain the purpose of a cash flow statement. The cash flow statement serves several important purposes. The first purpose is to show liquidity. It shows whether the business has enough cash to meet its obligations. The second purpose is to show cash movements. It shows where cash came from and where it went. The third purpose is to assist in decision-making. It provides information for management. The fourth purpose is to assist in planning. It helps to forecast future cash flows. The fifth purpose is to assist in evaluation. It helps to evaluate the performance of the business. The sixth purpose is to assist in borrowing. It is used by lenders to assess the creditworthiness of the business. Understanding the purpose of a cash flow statement is essential for understanding why it is prepared. This is frequently tested. Now let me explain the difference between cash flow and profit. Cash flow and profit are different. Profit is the surplus after deducting expenses from revenue. Cash flow is the movement of cash in and out of the business. Profit is calculated on an accrual basis. Cash flow is calculated on a cash basis. A business can be profitable but have a cash shortage. A business can have cash but be unprofitable. Profit is shown in the profit and loss account. Cash flow is shown in the cash flow statement. Understanding this difference is essential for understanding the cash flow statement. This is frequently tested. Now, let me explain the components of the cash flow statement. The cash flow statement has 3 components. The first component is operating activities. This includes cash receipts from customers and cash payments to suppliers and employees. The second component is investing activities. This includes cash receipts from the sale of assets and cash payments for the purchase of assets. The third component is financing activities. This includes cash receipts from issuing shares and loans, and cash payments for dividends and loan repayments. The net cash flow is the sum of the 3 components. The net cash flow is added to the opening cash balance. This gives the closing cash balance. Understanding the components of the cash flow statement is essential for preparing it. This is frequently tested. Now, let me explain the operating activities section. The operating activities section shows the cash flows from the normal operations of the business. This is the most important section. It shows whether the business is generating enough cash from its operations. The operating activities section can be prepared using 2 methods, the direct method and the indirect method. The direct method lists actual cash receipts and payments. The indirect method starts with the net profit and adjusts for non-cash items. The indirect method is more common. Understanding the operating activities section is essential for preparing the cash flow statement. This is frequently tested. Now, let me explain the indirect method. The indirect method is the most common method. It starts with the net profit. The net profit is adjusted for non-cash items. Non-cash items include depreciation, amortization, and changes in working capital. The adjusted profit is the cash generated from operations. The cash generated from operations is then adjusted for interest and tax payments. The result is the net cash flow from operating activities. The indirect method is easier to prepare. It is used by many businesses. Understanding the indirect method is essential for preparing the cash flow statement. This is frequently tested. Now, let me explain the direct method. The direct method lists the actual cash receipts and payments. The cash receipts from customers are calculated. The cash payments to suppliers are calculated. The cash payments to employees are calculated. The difference is the net cash flow from operating activities. The direct method provides more detailed information. However, it is more difficult to prepare. It requires more information. The direct method is used by some businesses. Understanding the direct method is essential for preparing the cash flow statement. This is frequently tested. Now, let me explain the investing activities section. The investing activities section shows the cash flows from the purchase and sale of assets. This includes cash receipts from the sale of property, plant, and equipment. It includes cash payments for the purchase of property, plant, and equipment. It also includes cash receipts from the sale of investments. It includes cash payments for the purchase of investments. The investing activities section shows how much cash is being invested in the business. A negative cash flow from investing activities means the business is investing in assets. A positive cash flow means the business is selling assets. Understanding the investing activities section is essential for preparing the cash flow statement. This is frequently tested. Now, let me explain the financing activities section. The financing activities section shows the cash flows from borrowing and repaying loans. This includes cash receipts from issuing shares. It includes cash receipts from taking out loans. It includes cash payments for repaying loans. It includes cash payments for dividends. The financing activities section shows how the business is raising and repaying finance. A positive cash flow from financing activities means the business is raising finance. A negative cash flow means the business is repaying finance. Understanding the financing activities section is essential for preparing the cash flow statement. This is frequently tested. Now, let me explain the format of the cash flow statement. The cash flow statement has a specific format. The first section is operating activities. The net cash flow from operating activities is calculated. The second section is investing activities. The net cash flow from investing activities is calculated. The third section is financing activities. The net cash flow from financing activities is calculated. The total net cash flow is the sum of the three sections. The total net cash flow is added to the opening cash balance. This gives the closing cash balance. The format is important for preparing the statement correctly. You must know the order of the sections. Understanding the format is essential for preparing the cash flow statement. This is a practical skill. Now let me explain the importance of the cash flow statement. The cash flow statement is important for several reasons. First, it shows liquidity. It shows whether the business has enough cash. Second, it shows cash movements. It shows where cash came from and where it went. Third, it helps in decision-making. It provides information for management. Fourth, it helps in planning. It helps to forecast future cash flows. Fifth, it helps in evaluation. It helps to evaluate the performance of the business. Sixth, it helps in borrowing. It is used by lenders to assess creditworthiness. Understanding the importance of the cash flow statement is essential for understanding why it is prepared. This is frequently tested. Now, let me explain the limitations of the cash flow statement. The cash flow statement also has some limitations. The first limitation is that it is historical. It shows past cash flows. It does not show future cash flows. The second limitation is that it is not a substitute for the income statement. It does not show profitability. The third limitation is that it is not a substitute for the balance sheet. It does not show financial position. The fourth limitation is that it is subject to manipulation. The classification of cash flows can be manipulated. The fifth limitation is that it is not standardized. Different companies use different methods. Understanding the limitations of the cash flow statement is essential for a balanced view. This is a key concept. Now, let me give you sample exam questions to prepare you for your test. What is a cash flow statement? A cash flow statement is a financial statement that shows the movement of cash in and out of a business. State the purpose of a cash flow statement: to show liquidity, show cash movements, assist in decision-making, assist in planning, assist in evaluation, and assist in borrowing. State the three sections of a cash flow statement: operating activities, investing activities, and financing activities. What is the difference between cash flow and profit? Profit is the surplus after deducting expenses. Cash flow is the movement of cash. What is the indirect method? The indirect method starts with net profit and adjusts for non-cash items. What is the direct method? The direct method lists actual cash receipts and payments. What are operating activities? Operating activities are the cash flows from the normal operations of the business. What are investing activities? Investing activities are the cash flows from the purchase and sale of assets. What are financing activities? Financing activities are the cash flows from borrowing and repaying loans. State the importance of the cash flow statement. It shows liquidity, helps in decision-making, and helps in planning. Let me summarize everything we have covered today. A cash flow statement shows the movement of cash in and out of a business. It has three sections: operating activities, investing activities, and financing activities. Operating activities show cash flows from normal operations. Investing activities show cash flows from assets. Financing activities show cash flows from borrowing and loans. The indirect method starts with net profit and adjusts for non-cash items. The direct method lists actual cash receipts and payments. The cash flow statement is important for showing liquidity and helping in decision-making. Understanding cash flow statements is essential for accounting. This is Topic 6 in your SS3 accounting series. Study it well. It is common in essay questions. Well done.